afternoon. Today we would like to present you the case of Lehman Brothers company. So what is exactly Lehman Brothers? Lehman Brothers was one of the four largest investment banks in the USA in the beginning of the 21st century, following Merrill Lynch and Goldman Sachs and other huge banks. So it was operating in the investment sector basically, and was one of the banks to keep the US economy afloat during the crisis, and it was one of the biggest banks to look forward to. So
that's why it came as a surprise or even shock that on September 15, this firm filed for Chapter 11 bankruptcy protection following the massive exodus of most of its clients, the drastic losses in its stock, more than $600 billion, and the devaluation of assets, 45% plunge. This all in result was the major part of the coming financial crisis of 2008. And we were hired as experts to solve the next problem.
And the problem is, how should we save Lehman Brothers and prevent it from bankruptcy? But to solve this case, we should state strong points and weak points of this bank, and I would like to start with the strength of these banks. To begin with, Lehman Brothers was famous for its financial diversification. That means that it not only invested in the mortgage sector, but also in the oil sector and even in the entertainment one. For example, everyone knows now the 21st Century Film Corporation and others. And it also invested in such risky sectors that turned out to be successful, unlike the other investment banks, and it brought Lehman Brothers a huge profit, actually. One more point is that the management, and to be more exact, the head of Lehman Brothers was a close friend of Franklin Roosevelt, and he was at the same time the mayor of New York. And what it means that Lehman Brothers had close connections with the government structures, and for this reason it had a chance, it had a right to trade actively with the T-bonds that brought them the reputation all over the world and a goodwill.
However, it was not very cautious in mergers and acquisitions. For example, in 1975, it merged with a company that led later in 80s to the massive firing of LB's employees and bankers. And of course, the major reason, too much involved in mortgage market, since the highest portion of all its investment was in the housing sector, which is quite vulnerable to any downturn in that market. And of course, tense relations between the members of the board of managers and directors in the LP. Since the death of Robert Lehman in 1969, the striving board managers and directors were trying to get the bigger slice of this huge pie.
Yeah, that was a huge one. So what we have four opportunities. The first one, as I mentioned earlier, Lehman Brothers had close connection with the government, so that meant that, of course, the management hoped that in any case they would be safe and sound just because they had close connections with the government structures and representatives. What is more, it had a huge connections, set of connections with the domestic banks and international banks, just because of its goodwill and just because of its huge experience of solving different financial problems. And it was known all over the world, so it had a huge influence.
As of threats, of course, high leverage. For example, they invested in market-backed securities, and let's say it was revealed that those assets were not as worthy as expected, and they went bankruptcy ultimately. Well, of course, we can say here that there were high risks of deregulations, and even the apprehension of this risk was, well, let's say, not up to the standards. And of course, fake ratings from competitors and news agencies. Well, we can even say that competitors themselves were a threat. Let's call it tensions. We all know about the aggressive policy of Goldman Sachs.
Okay, so now moving straight to the point of solving this problem, we would like to suggest two options. The first option is to establish a new bank and to move all the bad loans into this bank, and then file a case for the bankruptcy. And I would like to start with the opportunities of this option. The first one, we will have the support from Lehman Brothers. That means that all the specialists, all the economists, and all the staff will be basically transferred from Lehman Brothers. So that means that we have a high level of trust to these staff. Then this is the quickest way to solve this problem and to escape the catch-22 situation with all these mortgage loans, because it would never end. And to conclude, there is basically no controversy with the law, because though it is quite a time-wasting procedure, but it's all legal, so there will be no questions from the government.
Well, as for the cons, it is competitively costly, but we all know that the result will make up for it. And a short period of time, of course. Well, the major problem is some legal obstacles ahead. But it is due to the lack of best practices, since almost no one has ever, let's say, opened a toxic bank back then.
So, our next option is to change the head of the company as agreed with the Fed. So we would put the responsibility to put the managers and put the head of Lehman Brothers to the federal system. This option has also some strong points, so it's much easier to change the head of the company than to leave hundreds of people without work. Then it will be more safe, so there will be less questions from the federal system side, from the government, because it will be under all their control, and they will be guaranteed financial security for the future, for the same reason, because we will be under the not straight, but still some kind of control from the government.
Well, it is always difficult to find reliable specialists who will not be traded to the third party. That's obvious, I think. And also obvious, well, as the option states itself, it means greater dependence on Fed, and again, as a result, which will lead to reputation loss. And, of course, partial loss of client network, which is also essential.
From our point of view, the first option has more strong points, so that is the reason why we have chosen it. And here in this slide, you can see the course of action that we are going to take, and all the steps we are going to talk through in more details. And the first one is to establish a board of experts. As I've mentioned earlier, we will have a great opportunity to transfer all the specialists from the Lehman Brothers, and it won't take us too much time, for about 2 months, I'm sorry, and there will be about 10 experts, so we will need financial advisors and lawyers, of course. Here you can see the approximate salaries, so all in all we will need this sum of money to transfer all this stuff, and the result will be the approval of the detailed roadmap from these specialists, and they will work out a plan of actions for us, what we should do next.
Well, next step is actually establishing a bank. It might have been a bit difficult to do, but back then it was quite easy, let's assume that. So first we create a board of directors, and they are transferred from LB company. This is essential. Then we find a capital. Well, we already have part of it since we're an LB company. And we can find any sum of money due to Fed partnership programs that were a lot back then again. Then we just need to receive approval for a federal state charter from the Office of the Controller of the Currency. Again, almost no problem. We find a space for future bank, we propose renting, then create a legal team which includes previous experts, plus IT specialists and other stuff, all selected by HRs of LP company. Period, it will take approximately 6 months, which is again a standard procedure for a standard normal bank. And total cost is $25 million. It also includes starting capital and salaries, bureaucracy fees, rent, and even overheads.
I think we could afford this. The next step is to create an image of this new bank, which is really essential because we need people to trust to this new bank. And for example, some film stars, some sportsmen can attract more attention during the advertisement on the TV. And of course, more people will be attracted to this bank, and with this step, we will gain the goodwill for the bank.
Next, again, a crucial moment, relocate bad mortgage loans. Well, first, we work with the mortgage deals on attractive conditions for customers, but not only for clients, but also for investors. Then we establish a partnership between the bank we're opening and the Lehman Brothers company. Then we transfer all the clients to the bank. Well, we can state that we no more operate with mortgage loans. It will take, again, half a year before starting the transfer procedure, and we will just continue relocating bad loans until the bank has at least 85%.
So now, since we have all these steps done, we are going to our final step, and this is file the case of bankruptcy. And you know that the bankruptcy is the 11th chapter file, and the only thing we need to do is to wait for the verdict. So we need for the verdict to claim the Lehman Brothers bankrupt, and then we need, of course, to deal with the consequences. That means that we need to pay off all the debts, all the credits to our clients, because still we have to maintain our goodwill. And the very case of filing for the 11th chapter will take us only 30 to 40 days, so it's not that long. So that was our way to save the huge giant and unthinkable finance monster. We hope that it was useful for you.
Thank you for your attention.